Nvidia's earnings are right around the corner, and all eyes are on the AI giant. Can Nvidia continue its massive rally, or is it time to take some profits? Hello, everyone. Welcome back to Profit Playfield. My name is Zach. Today, we'll break down key earnings expectations, the bullish and bearish case for Nvidia, and whether it's still a buy at these prices. So, if you own Nvidia stock or you are thinking about buying, stick around. This one's for you. Let's dive in. First up, let's talk about what Wall Street is expecting from Nvidia's earnings this quarter. The consensus among analysts is a revenue of approximately $38 billion, representing a 72% year over year increase. Forecasts suggest an EPS of around 85 cents, marking a 70% increase compared to the same quarter last year. The EPS forecast of 85 cents would represent a 13.33% increase from the previous EPS of 0.75. Nvidia reported a record revenue of $35.1 billion, a 94% increase from the previous year, with data center revenue reaching $30.8 billion, up 112% year over year. Over the past 6 quarters, Nvidia has consistently exceeded earnings expectations, with the most recent EPS of 81 cents, surpassing the projected 75. The surge in artificial intelligence applications has significantly increased the demand for Nvidia's GPUs, particularly the Hopper H200 and the upcoming Blackwell B100 series. Major tech companies like Amazon, Meta, and Alphabet, which I am invested in all of those, have announced substantial investments in AI infrastructure, further bolstering Nvidia's growth prospects. Nvidia's strategic focus on AI and data center technologies has positioned it as a leader in the semiconductor industry. Analysts project that Nvidia's sales will grow at an annualized rate of 38.5% from 2024 to 2026. That's huge, with potential for the company to become the first to reach a $4 trillion market capitalization, according to MarketWatch. Nvidia has crushed estimates for the past few quarters, but can it keep the momentum going? Let's take a look at the bull and bear case. Now let's dive deeper into why Nvidia remains a powerhouse beyond just this quarter's earnings. While its AI and data center dominance is well known, there are several underappreciated growth catalysts that make Nvidia a compelling long-term investment. Nvidia isn't just a hardware company. It's becoming the backbone of AI software development through CUDA, TensorRT, and AI model optimizations. Unlike competitors, Nvidia's software locks in customers for years, creating a recurring revenue stream that extends beyond GPU sales. NVIDIA AI Enterprise is a subscription-based software suite designed for AI development. As AI adoption grows in industries like finance, healthcare, and logistics, these enterprise solutions could drive high-margin recurring revenue. Omniverse, NVIDIA's 3D simulation and AI-powered digital twin platform, is gaining adoption in manufacturing, robotics, a virtual collaboration, and unlocking new enterprise revenue streams. NVIDIA's Drive 4 platform launches in 2025, integrating AI computing and self-driving capabilities into a single chip. Automakers like Tesla, Mercedes-Benz, and BYD are adopting NVIDIA's self-driving tech, making it a key supplier for the future of AV. AI-powered robotics will be a $100 billion plus market in the coming years, and NVIDIA's Isaac AI platform is leading the charge in logistics, industrial automation, and smart warehouses. Companies like Amazon are already testing AI-powered warehouse robotics, with NVIDIA at the core of these innovations. So, right after I graduated college back in 2021, I really struggled to find a job. So, what I did was, with no experience, I needed to pay the bill still. So, I went in the warehouse at Amazon, and I kid you not, this was down in Wilmington, Delaware, one of the biggest facilities I've ever worked in for any sort of work. But there was it was like the size of an airport, and 2 of the floors were completely just run and managed by robots. Everything with AI was like perfectly set, and nothing would bump into each other. These robots are basically like Roombas, and they would move across the floor carrying a stack as high as the ceiling of all these different orders, and then it would funnel these orders into robots that would package them. Insane logistics there, and the future of automation, it is coming for us. It's not a matter of if, it's a matter of when, and when is now. So, big thing to watch out for. As an investor, it's a good thing. As a worker, you have to always innovate and stay ahead of this technology. While GPUs are NVIDIA's bread and butter, the company is expanding into data processing units, also known as DPUs, and central processing units, CPUs, to create a full stack AI infrastructure solution. NVIDIA's AI cloud services allow businesses to rent AI computing power directly from NVIDIA instead of buying hardware, making AI more accessible to various enterprises. As we've seen in the past, the dot com bubble, I wasn't old enough to even start investing in the dot com bubble. A lot of companies pop up, but it doesn't mean they'll last. So, a lot of companies right now in the AI bubble have been popping up, but whether it's a bubble or not is to be determined. A lot of people believe it is, but the run up is very similar to what happened in the dot com bubble. But I think it'll just shed off some weak chasing companies, to be determined what those are. But small market cap companies are the higher risk and volatility in this whole realm. Also, hyperscalers like Microsoft Azure, Google Cloud, and AWS, Amazon's web services, are integrating NVIDIA's AI powered cloud solutions, ensuring a steady, long term revenue growth. This is good for those looking to lock in for a while, especially along these projections. NVIDIA's free cash flow is expected to surpass $30 billion in the year 2026, giving it the flexibility for stock buybacks, acquisitions, and R&D, also known as research and development for those that you who don't know, investments. Unlike many tech firms, Nvidia has zero, surprising for a company in the US at this day and age, zero long term debt, providing financial stability even in market downturns. So, similar to Berkshire Hathaway, who sits on a heavy cash pile. Sure, they're an investment firm and invest mainly in like insurance, but they're not as susceptible to market downturns due to the fact that they have so much cash. Nvidia has a lot of cash that they have available, also zero debt. So that's a great thing. Overall, while short term valuation concerns exist, Nvidia isn't just riding the AI wave, it's building the AI economy. With massive expansion in enterprise AI software, automotive AI, and cloud computing, Nvidia is positioning itself for sustained long term growth. And some analysts believe Nvidia could be the first company to hit a $4 trillion valuation in the next few years. At a $4 trillion market cap with 24.533 billion shares outstanding as of November 2024, the estimated target share price will be 163.08 per share, which is over $20 more than it is now. Definitely a bullish increase at this market cap and plenty of room to run outside of that. And that's just for the year 2025. Looking at all these estimated share price targets from these variety of sources, we can find that they have an average share price target of $175, even more significant and over that $4 trillion gap. So these are all from November 2024, at least most of them are. There is a lot of way up here, and there's not many negative ratings. Some may see it as a bubble, but I see it as a buy. But it's not all sunshine and rainbows. Here are some risks to consider before buying Nvidia stock. The US government export bans have already hit Nvidia sales to China, which made up nearly 25% of its revenue last year, especially with the ongoing trade war between China, Mexico, the United States, and Canada. There could be some downturns here in the future depending on the unpredictable nature of our current president, Donald Trump. At a PE of over 50, Nvidia is pricing in a lot of future growth. If it misses earnings, the stock could pull back hard. So be ready for that just in case. AMD, Intel, and even Google are ramping up their own AI chips, which could put pressure on NVIDIA's pricing power and the competitive atmosphere they are currently finding themselves in. And if the AI boom slows, which right now it doesn't look like it will, but there's always that opportunity, so could NVIDIA's stock momentum. While demand for NVIDIA's AI GPUs is sky high, manufacturing capacity at TSMC, Taiwan's semiconductor manufacturing company, is a bottleneck. If TSMC faces production slowdowns, NVIDIA may struggle to meet demand. There's also a geopolitical risk here with Taiwan, as TSMC, NVIDIA's key chip supplier, being based in Taiwan, rising tensions between China and Taiwan could potentially disrupt semiconductor supply chains, posing a major risk and threat to NVIDIA's ability to deliver chips on time. supply and demand. And obviously, all these countries pull and have an effect. Developing next generation AI chips like Blackwell B100 requires billions in R&D, research and development spending. If costs spiral faster than revenue growth, Nvidia's profitability could take a huge hit. While hyperscalers Amazon, Microsoft, and Google are investing billions in AI, there is a risk that companies slow down spending if economic conditions worsen and they have to allocate their funds elsewhere. Or if AI adoption doesn't grow as fast as expected and as analysts are predicting, this could also result in a decent pullback for Nvidia. NVIDIA's dominance in AI hardware and CUDA software could lead to increased regulatory scrutiny from the US, European Union, and even China. Governments may seek to limit its market power, just as they've done with Google, Microsoft, and Apple in the past, and Meta is even facing criticism in Europe. Which is why you probably see Mark Zuckerberg aligning so much with the new administration, is because they'll probably defend him in the case that Europe goes after Meta again, whether it be in tariffs or something more on the defensive offensive realm. Tech giants that were once Nvidia's biggest customers, Google, Microsoft, and Amazon, are now designing their own AI chips, as previously mentioned, to reduce dependency on Nvidia. Google's TPU, Tensor Processing Units, are used for AI training, and Amazon's Trainium and Infrared AWS, Amazon Web Services, is pushing its own AI accelerators. Microsoft Maya AI chips. Microsoft is inventing billions of in house AI hardware. If cloud providers reduce NVIDIA purchases, the long term revenue outlook could be impacted more for the negative. NVIDIA is the AI leader today, but no company dominates forever. Regulatory risks, rising competition, supply chain issues, and economic slowdowns could create headwinds for NVIDIA. Could we see a short term correction before another rally? Let me know what you think in the comments below. So, are you a bull or are you a bear? Here's my take. If you're a long term investor, Nvidia is still a must own stock. I give it a high buy rating. The growth story is undeniable, and they have the best AI chips currently on the planet. But if you're looking for a quick trade, it's risky. A big run up into earnings means even a small miss could lead to a sell off and a big pullback. If Nvidia pulls back after earnings, that could be a solid buying opportunity for long term holders. Personally, I'm holding my shares and looking to add on any more weakness moving forward. So, what do you think? Will Nvidia crush earnings again, or are we in for a sell the news event? Drop a comment below with your Nvidia price target. Smash that like button, subscribe for more market updates. See you next time. Happy investing.